Hey everybody, welcome back to Business Bits, where we're going to talk to you a little bit today about how business owners can minimize their tax. Hey everybody, welcome to Business Bits with John and my dad. Wait, my name's not John. Your name's John. Hey everybody, welcome back to Business Bits with Michael and John Convery. If you guessed it, we are father and son, and we are going to talk to business owners today about a few ways they can minimize their taxes, just like Warren Buffett. Because at the end of the day, we all know Warren Buffett doesn't pay a lot in taxes. Arguably, he may even pay less than his secretary. So we're going to talk a little bit about ways you might be able to minimize your taxes, which are extremely important for business owners, Dad, because business owners make a lot of income, make a lot of money. But sometimes they give a lot back in taxes because they don't really have the strategies in place to minimize those risks.
That's very true, and it's very hard to duplicate anything Warren Buffett does, because I remember a conversation he said he had with Bill Gates years ago when Bill Gates first came out with Microsoft MS-DOS and was trying to tell Warren Buffett to get a computer. And Warren said, well, Bill, what would I do with it? And he goes, well, you could do your tax returns. And Warren said, well, my tax returns aren't very complicated. He goes, well, you got to keep a schedule of gains and losses. He said, well, I only own one stock, Berkshire Hathaway, and he's never sold a share, so he's never had a capital gain, and they don't pay a dividend, so he doesn't even have to report dividend income, which could be taxable. So Warren Buffett is a huge outlier, a unicorn, so to speak, but we can certainly take some lessons from him when he talks about tax efficiency. So we'll do that today.
Yeah.
And I don't know if his secretary does pay more in taxes than him, but I think as a percentage of her income, she probably does.
Oh, absolutely. She doesn't pay more, because how can you pay more than a billionaire? But percentage-wise, she likely pays more in taxes than her boss does, just because he knows how to maximize his tax risk and his tax strategies, because he's been doing it for such a long time.
No doubt.
So business owners that come into the offices, which are pretty much consistently coming on in week after week, what are some problems that they have that leads them to paying more in taxes that can potentially be looked at and mitigated? Because it's all about how much you keep, not necessarily how much you make.
Right. Yeah. So for business owners, number one, it depends on the kind of enterprise or business structure they have. If it's a C corporation, the top tax rate is 21%. That's actually the flat tax rate. An S corporation passes income through to the shareholder on their individual return, and you could be taxed at any one of the 7 marginal brackets, starting at 10%, going all the way up to 37%. I think the number one thing you want to do, though, is look at what strategies you can do inside your business to create more tax efficiencies or tax savings. For instance, are you fully depreciating your equipment purchases on an accelerated basis that's compliant with the IRS code? Ask your CPA about that. Are you fully utilizing and embracing tax advantages of different things, such as reinsurance companies or defined benefit pension plans, or 401k defined contribution pension plans? So those are some of the fundamental things. Oftentimes people even overlook those. So we want to make sure you don't leave money on the table or leave money on the IRS's table so they can take it away from you. Ethically and legally, we want to help you keep more of your hard-earned money.
Yep, and with a lot of the notions going back into politics, we now have 2020 coming on up, and there's going to be another election. So a lot of people there are always constantly asking, especially business owners, what is the future tax outlook, and how could I potentially save money now? Because a lot of people believe taxes might go up. They may not, but traditionally they usually go up.
Sure.
So what are a few steps business owners could take to maybe get ahead of the curve before taxes go up in the future?
Right. It's a great question, Mike. Arguably we are at historically low taxes in this place as a place setter in history. If you go back to 1943, Ronald Reagan, when he was part of the Screen Actors Guild, long before he ever had a glint in his eye of running for governor of the state of California and thereafter the presidency, he was in a 94% tax bracket. So he would just take off after doing 2 pictures a year, because 94% of his income after after that 6-month work period would be taxed at 94%. The other 6% would go to the state of California. So he'd effectively be working for free. Not very fun. But today we have low tax rates, and they are likely going to go up in the future. Now, here's why I say that. Number one, the Trump Tax Cuts and Jobs Act expires December 31st, 2025. So absent permanent legislation bipartisanly passed, those tax savings are going to be lost because tax rates are going to spring up. The second thing is we are in an election year in 2020, and all Republican candidates for the presidency of the United States, to the last one, Kamala Harris, Bernard Sanders, Elizabeth Warren, they all want to raise taxes on the wealthy, but the working class wealthy are really the ones that have a target on their back. So we think it's very prudent to pay your taxes at a discount. For instance, if you go to Nordstrom and you're going to buy a nice, beautiful suit like you're wearing, if you can get it on a 50% off purchase basis, you're going to be able to get two suits for the price of one. I think most people love to save money when they buy things, merchandise, indulgences. Well, why not save money on your taxes? So we offer some prescient, unique insights, arguably that are not taught or offered by most of your big box stores like your Merrill Lynch's or your Edward Joneses of the world, and really bring practical business owner planning at a grassroots level. That's, again, one constituent part of our complete retirement compass review, which is really trying to find the needle and make sure it's pointing to true north so you keep more of your hard-earned money as a business owner to seed money back into your business to expand or achieve whatever dreams you have in your enterprise.
Yep, absolutely. And saving money at Nordstrom definitely resonates with me because I actually just got my last suit for half off. So that's something everybody likes to do. Everybody likes to save. Even if you're spending money on luxurious high-end items, you always want a discount.
Absolutely.
So what are some of the things business owners can potentially do right now, or at least one thing they can do to really start to take advantage of the low taxes we're historically in today, to get ready for potentially them going up in the future? Because like you said, all the Democrats want to raise taxes. Some of them want to get rid of commercial air travel, but every one of them wants to raise taxes. So what are some things we can do today to mitigate the risk in the future?
Well, listen, first off, she's not running for president, but if Alexandria Ocasio-Cortez ever runs for president and gets elected, she wants to make sure there's no carbon footprint. All commercial aircraft will come to a screeching halt unless they can run on batteries. So we'll see what happens with that. But can you imagine our civilization where you can't even fly out of state? I don't know. That's hard for me to even conjure that one up. But from a business owner perspective, one very easy thing is, as we get to the fourth quarter of the year, is look at accelerating deductions as to things that you can deduct this year against this year's income by pulling some of next year's expenses forward into this year. There's a lot of different ways you can do that. And if you're not sure, give us a call. We'll be happy to educate you on a full list of those itemized opportunities. But that's just step one, Mike. Again, as part of our complete review process, we really look at all dimensions of planning, because if you don't do that, you run the risk of making a decision based on a monodimensional understanding. Like, you understand the investment itself, but you don't understand the consequences as to your tax picture. We want to make sure you're fully illuminated, that you understand both sides of the equation. And so that's something that we love to educate folks about, and we'll work hard continuously to do that.
Yeah, if you're a business owner listening, and you definitely want to make sure that you itemize your deductions, and that starts with having a good accountant in place as well as a good advisor. Because when you have a great accountant, we're fortunate enough we have one. Not every business owner does. When you have a great accountant, Dad, you're able to kind of take advantage of a lot of those deductions. Because they'll guide you along the way.
Oh, sure.
And that's why you need an accountant and an advisor side by side to make sure you're doing things the right way. And like you said, you're taking a look at the bigger picture, because it's not just about the micro. It's also about the macro. And some people just want to have a discussion on one piece of the puzzle. But when it comes to finances, you really need to have a discussion on the entire puzzle together.
That's right. You mentioned something very important there, Michael, the difference between micro and macro. I think all accountancies or CPAs, they run their practice to serve their clients' interests today, this year, making sure you make your estimated payments, you get certain deductions, but also that you file your 1120S or corporate tax return on time so you're not penalized by the IRS. But there's another thing here, Michael. Very often they're driven to the short term of what you can do to save taxes this year. Sometimes saving taxes this year will cost you a lot more money in the long term. For instance, if you did a Roth conversion and paid some taxes, more taxes this year, do you know how quickly it would be to your advantage that you'd save an enormous amount of money over your lifetime in taking retirement income? I had a client come in earlier today. The lifetime savings in taxes by being willing to pay a little bit more this year is about $300,000 over their lifetime. So that's an enormous number.
Not a small chunk of change.
No, it's an enormous number. And so looking at how you can get yourself into a position to lower taxes over your lifetime. We call lifetime value of a client as to how much is a client worth to our firm, so we can appreciate that relationship and be thankful for it. But also, what is the lifetime savings in your taxes if you do it right? And so those are things that we really want to help educate folks on. And the truth is, no one else really does it. So we're kind of like this lone, practice out there crying out, prepare the way to reduce your taxes. And hopefully some folks are listening, but I know you are. That's why you've chimed in or tuned in at least today to be visiting with us. So we appreciate your viewership, and hopefully you'll continue to follow us through in future programs that we offer.
Yeah, absolutely. And a lot of people there are unfortunately working with people that just don't understand the bigger picture. They may understand one piece of the puzzle, but you got to make sure you got an advisor in your corner that knows how to work with business owners, and that advisor that's giving you a second opinion potentially cannot be the person that gave you the first. We just met with someone not too long ago that their CPA was trying to be their advisor.
Right.
And that's not necessarily a good thing, because a CPA specializes in tax planning and really making sure, like you said, the itemized deductions are in place and year after year you're saving money. But that person didn't really understand the financial aspect. He just wanted to help out his clients. Great for him.
Right.
But he doesn't know the strategies that a true advisor would know, especially when working with someone selling off rental properties, and what to do with their assets going forward.
Right, yeah, that was a case where a CPA wanted to foray into the investment advisory theater to serve their client, but really the CPA is not informed on current tactics and investment strategy and diversification. For instance, he was preaching stocks and bonds as being the only way to diversify a portfolio. We call that diversification, because oftentimes it leads you to more total risk, because your assets are all moving in lockstep. They're correlated. Correlated meaning if the stock market goes up, your portfolio of underlying bonds goes up. But if the stock market goes down 60 to 70% of the time, your bond portfolio goes down. So that's really not where you want to be. You need much better different asset allocation and diversification to be truly diversified than that traditional mantra of just stocks and bonds. And again, we educate folks as to what the other alternatives are, just to give them something to think about, and then they can make adjustments that are going to make sound, good sense for them.
Yep, absolutely. This has been Business Bits. If you want to learn more about how a Roth IRA could potentially be a good option for you, or a couple of things that you can itemize on your tax returns that could save you as a business owner more money, make sure you go on over to businessbits.tips. If you go on over there, click the blog section. There's going to be this podcast as well as some additional information on the things I just touched base on. So again, make sure you check it on out. Businessbits.tips. It's very easy to find. Again, it's businessbits.tips. You can't forget it. But Dad, I think it's been a good show. I think it's time to head on out of here so people can tune on in and head on over to the website. Is there anything else you want to say before we head on out?
No, I don't think so. I think, folks, great. It's great to be with you. We look forward to welcoming you back. Michael has various ways you can communicate with us. Get in touch with us with your questions or concerns, or even your comments, praiseworthy or critique, because we want to bring better, improved content to you on a regular basis. So we'll be delighted to continue to work in the field to do that. So great to be with you. God bless you all. Mike, good to be with you, and have a magnificent day.
Goodbye now. Hey everybody, thank you so much for tuning in. Really appreciate it. Hope you enjoyed the videos. If you got some more free time, I know you do, make sure you check this video out right here. And if you don't like that one, make sure you check this one out too, or just watch them both. See you guys soon.